Hi guys, welcome back. So we have one very good news today and we have one very bad news today. Which one do you want to first begin? Alright, there's no mystery that the good news is that LKCO had won the hearing on Monday and we had the result last night. And the bad news is that Biden is putting more pressure on the Chinese stocks. So today we will talk about how this would affect our stocks. And I'll give you my opinion and my action plan. But before I begin, let's go over with the market first. Nasdaq is up 0.3% today, but in the morning it was going down quite fast, dropping 1%, but it has formed a W-shaped bottom and bounced back off nicely. But around noon, a lot of stocks were tanking, especially the Chinese one when we got the news. But near the end of the market, it recovered quite quickly and ended up rising 0.3%. So it created quite some panic. On Tuesday, when it was dropping quite a bit, I said that Nasdaq still has room to drop because we have went through a lot of the mega cap and see that they are in the middle of the sell-off and still have room to drop. So I drew this line of support and expected to stop dropping around 13,300. Today it dropped the lowest to 13,400. It's still 100 points away, but seeing the price movement in the morning, that created quite some panicking. It does look like some rebounding might happen, but I don't see Nasdaq doing a V-shape like this. Instead, I think it's gonna consolidate in this range for a while, if not dipping further. I don't see it breaking the new high, at least not in this month. I think the whole May is gonna be just up and down a lot. Like I said, a lot of the mega cap had quite a lot of sell-off, a lot of selling pressure to digest. When you look at Amazon, it was a few days of selling with lots of volume. And today we only had gained back 1% with little volume. So this shows that the mega cap is not finished with the sell-off and might take some time to consolidate, to rest, before it can gain momentum again and have more run up. So I think it might take quite some time for them to make an all-time high again. Worst case scenario, it can still dip to the 250-day moving average, around 3,100. That's what I think. And I still think Russell 2000 looks better to me, even though it was just up 0.09%. So it had dipped to the support I drew before at 218 and stopped dropping and bounced back off and had formed another hammer line, so might be forming a good base here, and looks like we are still on the uptrend. So worst case scenario, it can take some time to consolidate, and best case scenario, it would break out of this resistance. First resistance at 225, okay? VIX has spiked up to above 20 at some point and come back down quickly. As I said on Tuesday, I expect the VIX to come down and be under control. The Fear and Greed Index is now at 51. This morning it was below 40 something, so closer to the fear side. So even though the Dow Jones and S&P 500 are near the all-time high today, the Fear and Greed Index is nowhere near the greed level. This just shows that investors are mostly hurting, so that's why the greed level has been a lot down since February during these few months. Even though the Fear and Greed Index is far away from the greed level, we see Dow Jones making an all-time high today because most of the stocks that grew was like banking, Goldman Sachs, JP Morgan, and also the big techs rebounding together drive the Dow Jones to be up. And because most investors are still quite heavy in techs and growth stocks, so that's why it doesn't affect the Fear and Greed Index that much. Now, if you wonder why all the indexes are growing well today and your portfolio is not doing extra well, then you can take a look at ARK Invest ETF. So RK had dropped 2.8%, near 3%. At some point, it was moving like with Nasdaq, forming a W shape, bounce back up, and then diving with it. But in the end, it did not grow as well as the rest of the index, making lower lows than the morning. At some point in the afternoon, it was dropping 5.2%. That's quite a big dip for an ETF. And because most retail investors are holding a lot of stocks similar to ARK Invest, it's kind of the investment style for the last 12 months. A lot of retail investors would follow the stock picks of ARK Invest. So that's why a lot of retail investors' portfolio would follow more on ARK's movement. Now, it has been 7 days. If you wonder why your portfolio has been making lower lows every day, you can see that ARK has been falling for 7 days continuously, and it had broken the record of the longest time of dropping, and capital flowing out for $770 million. Because most of the tech stocks in this are more speculative, non-profit tech companies, and more volatile with policies and regulation. But mostly because recently the worry of fluctuation has been the heat of the moment, and what benefit from it would be bank sector. So that's why recently the bank stocks have been rising. So a lot of people ask me, when will the sector rotate back to growth stocks or tech stocks? So right now a lot of capital is still in the recovery and value stocks because of the high expectation of a strong recovery, the economy reopening that can benefit the traditional industry and travel industry. Just like last year when the COVID would benefit the tech stocks, a lot of the stay-at-home economy. So all the tech stocks have been growing so strong for the last 12 months, and because of buy the rumor, sell the news, with the earning of 2020, that's usually the news for the sell-off. And I think it goes the same way with the value and recovery stocks. So for example, for the travel stocks, we have two scenarios. Scenario one, the vaccine rolls out very well, and we see a big boom in the travel industry. A lot of people are going everywhere to travel in this summer, and we know summer is the hot season for the whole travel industry. So I think a lot of smart money would be looking forward to the Q2 and Q3 earnings, especially the Q3. So I think the earning would be the chance for the sell the news action, just like the Q1 earning for a lot of the tech stocks, where we have seen massive sell-off after the earning, even though the earning beats the expectation, mainly because all the good news has been priced in for the last few months already. And the second scenario would be the economy is not opening as fast as we expect, like the vaccine may not roll out as smooth, or even if it does, the traditional industry and the travel industry might not recover as fast as we expect. Then I think the sell the news action would happen earlier, which would be when the economy starts to reopen. The sell the news action would happen gradually, and after they sell out, I would see the money slowly moving back to the tech stocks, because in the end it's always the tech stocks that move faster than the traditional industry. Anyways, it had always been like this for decades. So in either of the two scenarios, I see the second half of the year of 2021, I would expect the capital to move from the traditional stocks back to the tech stocks. And the scenario 2 would happen earlier than scenario 1. Okay? So now let's move on to the good news, is that we have won the hearing for LKCO, and we have been granted by the court the preliminary injunction. Yay! That's the first step done. So with this, Locan Technology can then proceed to NASDAQ and request to remain being listed on the NASDAQ. So that's why right after we see the press release announcing the favorable ruling granting preliminary injunction, 2 hours later it followed with another press release saying Locan shares to continue to trade in the United States on the NASDAQ stock market. So upon receipt of the court's decision, Locan contacted NASDAQ senior management to inform the action taken by the court and requested NASDAQ to reconsider the delisting determination and the decision to suspend trading that was supposed to be effective on May 7 at 8 p.m. So tomorrow was supposed to be the deadline for the last trading activities for LKCO, and as of right now, the company's shares will continue to trade on the NASDAQ stock market. So at least that can ease off the mind from a lot of investors, because at least they can continue trading LKCO on the same broker because the news of being granted the preliminary injunction was out last night near midnight. So at 4 a.m. when the pre-market opened, it right away opened at 1.9 and then slowly came down with a lot of selling the news action. I think a lot of people were taking profit already. And it is normal. We have always expected that after the hearing, even though we have good news, we would have a lot of profit taking and sell the news action. So we should not be surprised. And plus, the market was dropping like a flood again today. You can see a lot of stocks were red. And it's quite rare to have a stock that's rising 13% regardlessly. I mean, it's running very strong still, especially considering the market environment we are at right now at this moment. I mean, if you look at the small caps growth stocks right now, 99% of them look like this, making lower lows every day. Here is the chart of LKCO. Now I can add the comparison with, let's say, Jamia, which is a hot small cap stocks, and you can see the divergence starting from 2 weeks ago that LKCO just keep going up every day while Jamia keep going down. For example, NNDM, Nano Dimension, you can see the movement of Jamia and Nano Dimension, it's 99% aligned, very similar, while LKCO has been shooting straight up. Now that is quite bullish, but at the same time concerning, given a market that's still unstable. And if we have no more catalysts coming, the dipping action can happen after the result. And that would mean making lower lows, like the rest of the small caps. So that's why I think we shouldn't be too hyped up right now. Even though it's really a great news today, and I'm very happy for everybody. And we have been celebrating in the Discord chat last night already. At the end of the day, we need to be mindful of the stock market we are in. And sectors keep rotating, as well as stocks within the same sector. And also we still have the case coming up. So right now, the Department of Defense had asked for 30 more days to gather more evidence. But I really doubt that they can provide any new evidence, given the fact that the blacklisting of Lorcan Technology seemed like a complete random pick to begin with anyways. Just like Xiaomi, no one would have expected Xiaomi to be associated with the military. So I don't know what they can come up with given 30 more days, but it would create concerns for investors anyways, especially the institutional investors, as long as the case is still not settled. But for now, at least we have got one step, and quite an important one, and it was a great news today. If this news was out during January or early February, it would have sent the share price probably 50 to 100% to $3 to $5 at least anyways. So if you are a long-term investor and you don't mind the price action in the short term, I would still think if your position is too heavy, it's easy to get too emotional with the price actions. So you might want to take the opportunity to take some profit and trim off your position so it's not too heavy. Otherwise, I don't want anyone to be driven by the emotion again like a few weeks ago, because it's not LKCO if it's not extreme. We can expect the share price anywhere from $3 to $5 to as low as 50 cents. So as long as you have a manageable position, insignificant to drive your emotion, then it would be better. But I'm not a financial advisor, so do what you believe in and what suits you the best. Now, the bad news is that Biden team likely to proceed with Trump China investment ban. I first saw this from the Discord. So Biden said the Chinese are eating our lunch. If this keeps going this way, they'll own the electric market in the world. So I don't know if this is a good news or bad news for us, because on the downside, it means he wants to put more pressure, more restriction on the Chinese companies, especially the EV. But on the upside, it confirms our belief that China would for sure be the leader of the whole EV market in the world. So there's good and bad side of it. But the sure thing is right now he feels very threatened by the Chinese companies, especially in the EV sector. That just shows us how strong and how advanced they are already, especially so many companies in the EV industries are under the spotlight. Like the suppliers, a lot of different companies on the supply chain. For example, we own one of them. LKCO is totally under the shadow, under the spotlight, and yet developing key technology for the EV, and it's just one of the many examples. But this for sure has given the Chinese stocks a big hit because it shows that he wants to continue Trump's legacy. So this article was released today at 2:30 p.m. But I saw the picture shared by our Discord member from this tweet by Walter Bloomberg. Biden team likely to proceed on Trump's China investment ban. Share at around 1 p.m. So we can see the KWEB China ETF. It was at first forming a W bottom with the Nasdaq at first. And then this was around 1 p.m. We can see that it tanked right away. If you look at Baba, you can see this. Let's look at the minutes chart. This is Alibaba in the morning forming the W-shaped bottom with Nasdaq. And then suddenly, within a few seconds, dropping from 226 to 222, but also recover very fast within a few seconds. So when I saw this, I right away bought the dip and I shared that on the Discord. I mean, look at the selling pressure and how fast it was. And let's look at NIO, because I think the news of China investment ban would affect popular Chinese stocks the most. And NIO is the #1 most popular Chinese stocks in the US market. So it should affect NIO the strongest, you see, causing the share price drop from 37 to the lowest of 35.7. We see that at some point it was causing NIO to drop at most 5% of the day. It would affect NIO because I think it's the most popular among the retail investors, and that's why it would hit it harder. Because in the morning we actually had a little bit run up at first. Even though the market was selling off, it was not doing too bad because today NIO announced a plan to expand overseas. NIO is getting into Norway this year and plan to expand to 5 more countries in Europe next year. CEO Li Bin said that they would try to keep a low profile and be patient and careful with the long-term plan. The reason why they chose Norway to expand overseas first would be because Norway has really good policy and encouraging EV, and also because it's not a market that's too big or too small. So it's quite perfect as a first entry. And he also tried to manage the expectation of investors by telling everyone that it is not as easy for Chinese companies to expand overseas as 5 or 10 years ago, and they are well aware of that. So he's trying to manage expectation here in order to not overpromise. So as usual, a good news that could usually drive up a share price did not happen, and instead it got hit by the news about Biden's plan to restrict the growth of the Chinese EV. I think a lot of people are very frustrated right now with Chinese stocks with a lot of drama going on. But in my opinion, this is a good sign for me because opportunities only come when there are more opposing opinions or disagreement. In fact, I think this kind of news might have been realized a long time ago for institutions. They usually know this before retail investors. When you think about it, such a bad news, normally it should drive all the Chinese stocks down 5, 10% or 20% even. Back in March, that's what happened, right? But when you look at the ETF, CQQQ was down 0.05%, PGJ was down 0.3%, KWEB was down 0.01%, so basically flat. And in the end, the day even finished with a green bar. So it really doesn't make sense, right? So I think we are the last one to know this kind of news, and it might have been priced in already by the institutions. Maybe more retail investors would find out later, maybe by watching more media and blowing it up more than it should be. So we might see more panicking tonight or tomorrow. Maybe that's why the post-market had been down a little bit. But it usually takes time for retail investors to know information, and the institutions are always ahead of us. So I think there's a good chance that the bad news had already been priced in the share price, and that caused the significant downward movement since last month, and it was having a divergence with Nasdaq. or even Russell 2000. So that's why I bought the dip today for NEO when it was around 36 here. I share my trade today on the Discord, and I said that I would be aware of the price dipping further because it might take time for a lot of people to digest the news overnight, or simply for more media to blow it up. So to play it safe, we should buy slowly. So that's why I am still very bullish on Chinese stocks, and I think it's important to stay patient and consistent because institutions always know more information than us retail investors, and way more information. And there had been so much fear going on and so much frustration over Chinese stocks. Think about who had been buying on every dip, okay? I do still strongly believe that a lot of the Chinese stocks had been quite undervalued. Maybe not NEO, because NEO still has high valuation. There's no doubt about that. But for a lot of the other Chinese stocks, like some of our stocks, we buy it because we truly believe they are under the shadow with good technology or good products, and yet undervalued because of the political issue, and this has not changed. In fact, I have been going heavier and heavier in my portfolio for Chinese stocks, swapping some of the US stocks to Chinese. Another thing is that you can see the Shanghai Composite Index. It's that we know that the Chinese market had been closed for a few days because of the long holiday, right? And during these few days, the US market had been dropping quite a bit. And also we have had so many bad news already, like the Biden's Buy American speech at the end of last week. So normally we should expect a sell-off at the market open for the Chinese stock index because it would have accumulated a lot of bad news over the long holiday. But in the end, we saw that it was dropping 0.1%. On the other hand, the Hang Seng Index went up 0.7%. It had digested the Buy American with a few days of dropping, and looks like it's getting supported here, hopefully forming some base. So I am not giving up on our Chinese stocks. I'm just being patient and consistent right now because I don't think it is that simple to ban all the Chinese investment, especially LKCO had just won the preliminary injunction from the court. And if this ban of investment keep going, the US government also risks being sued by many Chinese companies at the same time, and that would be a big risk too. And secondly, it is not only the Chinese EV stocks that's being listed in the US stock market, but it's also a lot of the American companies relying on the Chinese market at the same time. So I don't think it's this simple to just suddenly ban and delist all the companies. I think it would involve a lot of issues. Now, that's it for today, and if you have enjoyed this video, please give me a big like and write me a great comment, and I'll see you in my next video. That's it guys, hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.